Hi, everybody, and welcome back to Friday Focus, the program that introduces you to structural valuation analysis, in which we merge fundamental with our unique approach to technical analysis. I'm Ross Healy, the chairman of Strategic Analysis Corporation. Today, we're going to take a hard look at the Berkshire Hathaway B shares, which I believe offers considerable risk to shareholders. But first, let's go and take a look at the long history of Berkshire Hathaway B shares going all the way back to 2008. And isn't this an interesting chart? You can see that the price of the company has been constrained between two breakpoints. Its HC price on the top here, that's its high conservation price, or 1.5 times book value. And on the bottom, by its, what we call its end price, its normal price, a price to book of 1. The company has been floating back and forth between those breakpoints for a long time. Unfortunately, today, I believe that there are 3 strikes against the stock. The first and foremost one is that the stock has actually broken support at its HC price here. It's fallen below that price, which is usually a signal that whatever the stock is, it's about to drop to the next lowest breakpoint. Well, that's its high mid price, which was some 16% lower than the current price. And if we look at the long history of the stock going back to 2008, we see that there is a further tendency in weak markets for the price to fall even further down to its normal price or its adjusted book value. That is a decline of 30% from here. Well, what are the elements that would concern me? First of all, I am concerned about the height of the market, and that by itself is a warning. However, let's look at cash holdings in their portfolio total some 25% of the total investment portfolio, and some think on a book value basis that it's as high as 33%. In my long experience, the market does not pay companies to sit on their cash. It pays them to work it. And if they sit on too much cash, there tends to be a discount in the price. Well, wait a minute here. Didn't Warren Buffett say something about holding cash? Hey, he said it's a deferred investment for when values emerge and opportunity knocks, right? Yeah, but look, holding all that cash might be a good thing. Unfortunately, you're already paying $1.50 per dollar of that cash that Berkshire Hathaway is holding. So, what's left for you? Elements of the company are cyclical. Burlington Northern and Santa Fe Railroads, certainly that's the case, although I will have to admit that they've had good results quite recently. But behind everything is the concern that Warren Buffett is now about to retire. And with Warren Buffett gone and Charlie Munger gone, how good are those new managers going to be? Well, we don't know yet. And do you want to find out the hard way? What should you as a shareholder do? Well, I think you have 3 different options. The first one, if you've held the stock for a long time and your cost base is quite low, you will need to determine how much capital gains you will be paying if you sell your shares and buy back later. Because if you discover that you can't buy more shares down the road than you have today, then maybe you should stick it out and look at the long trend of upwards movement. If I was to lay my cursor here on the normal price, how many years has it taken the stock to rise from this price to its current level? Well, we go back here and look at that's April 23. Well, that's only 2 years. So maybe if you're a long-term holder, maybe you do nothing at all. If you're a shorter-term holder, of course, then it may well pay you to take your gains now, buying back at a lower level later. Finally, if you wish to hold your shares, you may want to consider doing a covered option right against your shares. And that way you can hold your shares, get some income, if you like, and lower your cost base, but continue to hold if you anticipate that growth is going to be continued in the future. Now, you're going to need an option specialist to help you with this, however. Anyway, that's it for today. Next week, I am considering reviewing the Magnificent Seven shares, which I have not covered in some while. And there has been some pretty big changes since the last time I talked about them. So, until then, have a good week, and I will see you next Friday.